Good morning, traders. It is 7:26 a.m. Chicago time on the 12th of September 2016. It's Monday. This is a pre-recorded Trader Bite. Again, the purpose of pre-recording it is to make sure you have a quality broadcast. Currently, my uh, broadband provider is not stable at home. Um, the office is fine, but anyway, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Overall, the risk allocation overnight continues in the same trend as it was in on Friday. The market is lower. Crude oil taking a hit, losing another 2.18%. Crude has come off from the big gains it made last Thursday. Last Thursday, it went up as much as around 4%, and it's taken all of that back. The only market that is, the only product that I'm watching that is strong is the British pound currently. I'll show you in a minute. Actually, it's the British pound and the Japanese yen. The yen is up 0.79% currently. Um, and the weakest equity product is the Euro Stocks 50. The Euro Stocks 50 down 1.87%. DAX is 1.69%. The DAX is down 178 points, followed by gold. The interesting thing to watch later, I'll show you a chart of it, is how the market has dropped across the board, which is kind of unusual. The VIX is climbing nicely, just a beautiful trend up on the VIX. I'm very excited about it, and ranges have expanded quite a bit. So we'll cover some of that. Overnight news. Much of the chatter, of course, is about Hillary's pneumonia and the scene that happened yesterday. But other than that, there's really not much more. Lint and Praxair have ended their merger talks worth $60 billion. Um, and Samsung selling its printer business to Hewlett Packard. And if you own a Samsung Galaxy 7 Note, don't turn it on. It might explode on you, catch fire. That's great for Apple. But that's really it. Looking at the calendar of events, busy week this week. Today we have a lot of Fed speakers. We're looking for, well, 7:05 a.m., 8:05 Eastern. We had Fed Speaker Lockhart. And then at noon Central, 1 Eastern, we have Fed Speaker Kashkari, who's a non-voter, middle on the economy. And then at 1:15 Eastern, 12:15 Central, Fed Speaker Brainerd on the economic outlook in Chicago. Other than that, I'm not seeing much on the calendar. We have our 3 and 6 month bills, bill auctions at 10:30 Central, 11:30 Eastern. That's worth 40 for the 3 month and 36 billion for the 6 month. And then at noon Central, 1 Eastern, we have a new 3-year note auction for 24 billion. At the same time, at noon Central, 1 Eastern, we have a 10-year note auction for 20 billion. But other than that, it's a clear deck for the day. Tomorrow, we're looking for the Eurozone German zoo survey, Eurozone employment, um, all at 4 Central. We're looking also for, actually a half hour before that at 3:30, we're looking for the the UK Consumer Price Index. Um, and then for the US, we're looking for the monthly budget statement at 1 o'clock Central. All times for this calendar are Central. Wednesday, we're looking for jobless claims change in the UK, weekly earnings, the ILO unemployment rate, and the employment change in the UK. Eurozone industrial production, we're looking for the Swiss Zoo survey, and then the US, we're looking for crude oil at 9:30. Thursday, we have UK retail sales, Eurozone consumer price index, and the Bank of England rate decision at 6 a.m. Central on in the UK. The Eurozone consumer price index is at 4, and then at 7:30, the U.S. has advanced retail sales less autos, initial claims, retail sales control group, and Philly Fed, as well as continuing claims at 8 Central, existing home sales, and at 8:15 industrial production and manufacturing production, and then at 9 Central we have business inventories. Thursday's pretty busy day in the morning, and on Friday we get the consumer price index at 7:30 Central, um, index X energy and food, and then we're getting the University of Michigan confidence at 9 Central. This is the preliminary number. This is a high importance number. And then, of course, at noon, the Baker Hughes rig count. And then at 3, we get net long-term tick flows. That's pretty much what we have going on for the week. Again, as mentioned, the market is allocating risk um, to safety. Currently, it's moving. The funds are moving into um, the safety currencies, especially the yen. Here's what we expected on Friday. Friday, we had a gap down. The expectation is for the market to attempt higher and then to rotate down and start moving. But of course, the ranges have been so tight that the expectation is, my expectations are not very high for range expansion, and that's very clearly wrong. I looked for the market to have an open auction out of range on the open, pretty tight auction on the open, as we have had over the last few weeks, and then make an attempt higher. But overall, the market, the hypothesis or the key trade idea is to trade down. At 13.5, the gap, the distance between Friday's close, not settlement, but close, and Friday's or Thursday's close and Friday's open was 13.5 points. And on a statistical basis, over 2,000 days and 250 something samples, there was only about a 30% probability that the market would rotate up and close Thursday's gap. So all things were indicating lower, and boy, did it go lower. The secondary hypothesis and the key target for Friday was the next MC point of control down, which was 2154, which is actually the oops. It's the 2154 is the MC point of control. It is the non-farm payrolls low. It is the LVN that we left behind from the 1st of September. All of those had confluence there, and it's also the value area low of the short-term MC or microcomposite or composite of days of the profile. And so that's what I expected, 2154. The secondary hypothesis was looking for it to break the overnight low to find buyers. Remember, the overall trend has been higher, and this is kind of a massive, has been sort of a massive flag formation over the last 2 months. And so I was looking for the potential that an attempt higher would push us down into 2154, and then buyers would step in, seeing prices are lower, and thereby stimulating demand at lower prices, and then prices would start to rise and push into or attempt towards the prior day's low. That did not happen. Here's what actually happened. So it's always nice to have this scale is 30 points deep. It's 30 points deep. It's set to range of 30 points. And it's always nice to see that a day does not fit in that range. Very happy about that. But here's how things shaped up. We had an open auction on the open, a fairly tight opening swing, 2158 to 2155. The market could not retest the high print early on, and then continued to expand lower. The obvious trade was right there, a test of, let's see if we can draw a proper circle here. No, a test of the mid, and then it started to push lower. It had already hit. It already hit the. It actually opened slightly lower than I expected. It already hit our 2154 target and pushed through it. So it hit it. It missed it up here, pushed through, pulled back right to it, pushed down to 2149, and then a retest of mid confluence with the 2154 MC point of control and the LVN uh, with the VWAP. That's why that's the ideal. That was the ideal entry right there. You had to pay attention. It didn't last very long. And then from there, it's all just your usual trending type profile where it's just consistently uh, pushing lower and lower and pushing the point of control down. And you could see how many high volume nodes we've put in. So this is a typical behavior for a trend day. It's one of the hallmarks of a trend day is that it pushes down, consolidates, pushes down, consolidates, pushes down, consolidates, and that's why you get these high volume nodes all the way through. The market rested right in the gap zone that was created on our gap up day. So the balance zone that we've been looking at for the last 2 months started on July 12th. So we gapped up and we've gone sideways since. And it started on July 12th, and this is the gap zone right here. It's 21.30 and a quarter up to 21.31.75. And the market just rested here, brought the point of control down. There's a lot of trading that occurred in that low volume node, and then it continued into the close. So the last half hour, there was a substantial amount of selling. Another thing to note, now we have a gap zone above. So here's we're introducing another incomplete auction above, and I'll mark that if you're using flex levels. I'll mark that as a gap zone. But overall, as it's moving down, you could see that it's fairly methodical with the retesting of the prior points of control, and then it moved down here on the 11th, the day before the gap day, tested the point of control, and then rotated up pretty good. It rotated up about 7 points. This was a pretty cool thing to watch here. And then as soon as it started to roll over, guess what it did? It hits the next naked point of control and then bounces up. Notice it's not doing the same thing with the closing price. So this measures the closing price. These dashed orange lines are naked closing prices. In other words, a price that where the market closed that remains untouched. This one's from the 11th. The market doesn't respect those as much as it does, although a lot of people talk about, trading, always taking the trade off of the closing price on a first touch. I don't believe that. I'm much more confident in volume-based prices because that is showing you the supply-demand equation all in one line. The way this closed, portends more selling. The market could not find sellers yet. This is why it's selling off. It's selling off to advertise, to stimulate demand. Prices drop for one purpose, and that is to stimulate demand. And the market stimulated the heck out of demand and just could not find solid demand, and it continued to stimulate demand, stimulate demand, stimulate demand, and it closed at the low. With it closing at the low, we expect that on the reopen we would continue lower, and that's what we did. So let's look at the overnight. Here it is, the overnight. We gapped down slightly. 21.1650 is where we closed on Friday. 21.15 and a quarter is where we reopened, and it has not retested that closing price yet. It's making its way back now, but immediately after the open, We rotated 15 points, put in a low at 2100 and a quarter. We have a double bottom, a clear double bottom overnight, almost a triple by a tick, and it kept making higher lows by a tick, and now it's pushing higher, basically changing my homework that I did last night on my expectations for the day, the way this is trading. Had it continued to be an impulsive move down, consolidation, push to the mid. Look at how beautiful that is. Back to the mid, rotate down, and then the expectation is for a continuation. In other words, to take out this 2100 quarter. It has not. This is where I stopped last night, right here. My expectation was for it to continue lower by at least a couple ticks beyond 2100 and a quarter, but we're at the century figure on the December contract. The market consolidated, has a nice high volume node, and has risen above the LVN of the high volume node, above the mid, and is showing strength in the short term. It's showing that buyers have stepped in. A quick thing I want to show you. This looks like a rainbow spaghetti factory, but what this is actually is it's a 15-second chart of everything that I'm watching on a quote board that's on the side. This chart's important to me in that it shows me how the different sectors and futures products are relating to each other. This chart starts at 0 on the open of Wall Street, not on the European open, not on the open of the bonds or notes. It all standardizes it. It standardizes everything to the open of equities. And what I'm comparing is the movement of various products to equities. And as you can see here, these thin dashed lines, like there, this one right here. These are the underlying products, the underlying sectors of the key underlying sectors of the S&P 500. They make up about 78% of the index. They are healthcare, industrial, the industrials, technologies, the consumer discretionary products, and financials. And I watch those very closely, and I watch the transports very closely. Not that I'm a Dow theorist or anything like that, but there's a tendency for this product to lead. You could see it was leading down, battling the Russell. The Russell is blue, TFS. But overall, what my point is with this chart is everything was pointing down except for the Japanese yen. The euro stayed flat. You could see it ended at 0.04 from the open. The euro, you would expect that if money is moving out of equities or risk assets, that it would be moving towards treasuries, it would be moving towards gold, it would be moving towards the yen, the euro, the British pound, and so on. And as you can see here, the Bund was down, gold was down, the bonds were down, the 10 years were slightly down to flat, the dollar is slightly down, and only the euro and the yen are up. So where did this money go? It just seems very, very broad. And on top of that, when I compare that to our overall range chart. So when we look at the first standard deviation of range on the S&P 500 on the day session only is 43 points. 43 points, or the second standard deviation, meaning the S&P 500 is likely to trade inside of 43 points of range on any given day, 95.45% of the time. 95.45% of the time, it's expected to trade within a 43-point range. And on Friday, our range was 42.5, missing that by 2 ticks. This is this is quite extraordinary range. The volume does not show up to be extraordinary, and the reason it does not is because of rollover. There's a lot of volume still trading on the September contract, so we don't see this coming in with volume. But I believe that if we had finished our roll, volume would also be at the second standard deviation, which is about 2.35 million contracts. On Friday, it traded 1.9 million. The norm is 1.05 million. So we had, what am I saying here? We had a market that has moved out of a major balance zone that we've been in for 2 months since July 12th. Um, it has moved out of that range with a substantial gap down. It has moved with substantial range and substantial volume with a very broad, based on that index chart that I showed you, with very broad participation across a wide set of markets, and to me, that spells continuation. Now, that's a lot of talk. Let's break it down. It's getting too long. Let's break it down to what we're expecting this morning. Hard to decide what is expected with the point of control, the overnight point of control beneath us, and the overnight LVN beneath us. I'm going to have to look for this retest of this 2106.50 area. And so the expectation this morning is for it to open. I expect it to test down to 2106.50 attempt, and I'm looking for the market to push back and tag the closing price of Friday. That price is 2116.50 that I mentioned earlier. I'm expecting that to be about a 10-point rotation. I'm looking for a pullback, and I'm looking for this to start moving back into the prior day's range. That is the primary hypothesis. Okay? And then the secondary hypothesis is for an attempt early on, a push lower, a retest of that double bottom, a push into the 96 and a quarter, and then I'm looking for this to bounce and stay in the middle. That would be hypo 2. In other words, the market still cannot stimulate demand, is still fighting to find buyers, and is going to have a rest day today. That's what that plan tells us. Hypothesis number 3 is an early attempt higher and a push lower, failure to find buyers again, and a continuation down, and then we finally arrive at the 2080 area, which is a key composite value, and that was something I talked about a month ago, that any tests lower are likely to target the 2080 area. 2080.50 is the number, and it might do so today. I do not expect a large continuation lower today because of the range that we had on Friday. I expect more of a rest day, more money standing by and seeing what the next rotation is. Those are my expectations today. Sorry it was a long one. It's Monday. There's a lot of action on Friday, and there's a lot to talk about. Hopefully you gain something from this. Again, I'll talk to you soon. This Thursday, we have our AMA. Please look at my Twitter stream, twitter.com/futurestrader71. You'll find the invitation to this Thursday's AMA, which is at 3:30 Central, 4:30 Eastern. I'm accepting the first 20 questions, and we'll address those. And most people find those useful. I always get good feedback on those. I'm open to answering whatever question you've got to the best of my ability. If I don't know, I'll tell you I don't. But sign up immediately if you can, and at least even if you could not attend on Thursday, by signing up, it guarantees you that you'll be included in the recording. You'll be sent the recording to whatever email you use to sign up. So it's up to you, but I suggest you do it now. There's also a link to sign up in the description of this video. Good luck. Take care.